Each time we head into earnings season, we hear Wall Street pundits say some variation of, it's not so much the results that matter, it's more the forward outlook that management teams give. And even though we seem to hear it every earnings season, it feels especially true now. The reason that is because most on Wall Street expect there to be a recession coming in the US sometime in the next 12 months. So while there will be a lot of attention paid to what companies did in the prior 3 months and how they dealt with rising costs and other issues, investors really want to know what companies are doing to prepare themselves for the potential coming storm ahead. As for the earnings themselves, Wall Street expects it to be kind of a mixed story. Data from Refinitiv recently showed that sales in the whole S&P 500 are expected to increase from about 10% from a year ago, and that there would be a nearly 6% gain in earnings. But there's always more to factor into the headline numbers, because when you strip out the energy sector of the S&P 500, we actually find that earnings are supposed to decrease by more than 2%, while sales may actually increase by 7%. With all of that in mind, here are the 3 things you need to watch this coming earnings season. The first thing you'll want to do this earnings season is pay attention to bank earnings. And it's kind of easy for you to do so because banks are usually among the first sector to post earnings in the quarter. They also happen to be my favorite sector to cover because you're not just getting a sense of what is going on with the banks, you're getting kind of a real-time view of what is going on in the economy. Because if you think about it, a bank touches just about everything that goes on. You have households borrowing for mortgages, for autos, for credit cards, you have businesses borrowing to expand, and banks get to see all of that, and they are constantly talking to their customers to see how their customers are dealing with whatever is happening in the economy. So when the banks post earnings this quarter, you'll want to pay close attention to what are they saying about loan growth, both at the consumer and business level. You will also want to hear what banks have to say about credit losses. Are their customers able to pay back the loans that they had? Are they going to have to restructure some of those loans? Anything that gives a sense on the health of their borrowers. We're going to be hearing from a lot of the banks this earnings season: JP Morgan, Goldman Sachs, Bank of America, not to mention a lot of the regional players. So when you're getting earnings results from the banks this quarter, obviously pay attention to what they said happened in the second quarter, but also listen to their earnings calls and what they say about what they expect to happen for the next 12 months. The second thing you'll want to watch this earnings season is forward guidance. I just spoke about how bank executives are expected to give their projections for the rest of the year, but that goes for all sectors. Typically during earnings season, it's not just companies saying what happened in the prior 3 months, they also either reiterate or revise guidance that they had given in prior quarters, saying this is now what we expect our full year earnings to be, and possibly even what next year's earnings will be. Now going into this season, because of inflation, because of fears of a recession, and a host of other issues, Wall Street expects that most companies may lower their guidance a little bit. And we've already seen that happen with retailers such as Walmart and Target, which have noticed a change in consumer spending patterns due to rising costs and a host of other issues. So this earnings season, yes, obviously pay attention to the financials the companies give, but also pay even more attention to what they say they expect for the rest of the year. The third thing investors will want to pay attention to this earnings season is the R word, and that is recession. Now, companies, of course, have to post their financial results, and many companies do post forward guidance. But the thing smart investors pay attention to is the analyst earnings calls, in which management teams field questions about how their business is doing and also give color on what they see coming ahead. This doesn't always show up clearly in financial results, but you can expect companies to field several questions about a coming economic downturn. The thing to keep in mind with a recession is that not all companies will fare equally during a downturn. A recession isn't fun for anyone, of course, but there are some companies that are better equipped to deal with it than others, especially because during a downturn, investors tend to look for more stable companies that tend to provide dividends, because that way they can offset losses in their portfolio with some income from the dividends. The companies that fit this bill are usually consumer staples, utilities, and telecoms, because no matter what goes on in the economy, people will still be buying food, they'll still need electricity, and they'll still be paying their cell phone bills. Now, the companies that people are a little bit more cautious about during a downturn are some of the more speculative companies that don't produce profits that allow them to pay dividends. So even though companies may be facing a slowdown, it's important to remember that it won't be equal across the board. So you tell us, what are you watching this earnings season?